All right, welcome to this snippet. What we're going to do is we're going to go over journal entries to record the sale of items from our inventory to our customers. So on June 1st, we sold merchandise for $6,000 with credit terms 210 net 30, cost us $1,600. So remember, when we sell inventory, we have two journal entries. First, the revenue side. Credit terms tell us that it's going to be an account receivable, so we're going to be owed this money. And then crediting sales. Debit for 6,000, credit for 6,000. Let's make these pretty. All right. Next one. Oops, I guess it would help if we put June 1 there. And then the next journal entry we're going to do is we're going to do our cost of goods sold and merchandise inventory. Okay, cost was $1,600. Okay, easy peasy. June 4th. Oh, let's do our journal. Let's do our T accounts over here. We're going to have to know that. Oops, let's do it right there first. Let's just kind of do a few T accounts over here, just in case, all right? So let's do account receivable, sales. We really don't need merchandise inventory on this situation. I mean, we're going to track it for obvious reasons, but so we'll just stick to that. If we need to populate something else, we will. Customer returned $2,000 worth, $200 worth of merchandise for full credit. So we're going to debit sales, returns, and allowances for 200, and we're going to credit accounts receivable for 200. Then we're going to do another journal entry for the inventory side. Except I don't know why I just did that. We're just going to reverse those, but for $80. Now, we didn't sell it anymore, so that's why we're going to back it out of cost of goods sold and fix our merchandise inventory. And then, oh, let's populate over here. So we return $200. Sales R and A. And then on June 9th, we received payment for what we were owed. So we're going to take to figure out this. First of all, they owe us. Let's find out how much they owe us. It's 5,800, I know, but we got to do the math. 5,800. So we're going to come over here and we're going to credit our accounts receivable for 5,800 because they no longer owe us the money. We're going to go sales discounts. Going to be 2% from our thing up here. It was 210 net 30. So we're going to take 2% and we're going to multiply it by what they owe us. So then we're going to receive cash in the amount of what they owe us times 0.98. There it is. So our accounts receivable and what we're actually getting money for. Oh, well, that's going to be zeroed out. Our sales returns and allowances. Now we're going to have sales discounts over here of $116. So when we come over here to calculate our net sales is going to be gross sales minus sales returns and allowances. Oh, it's thinking it's a formula. That minus sales discounts equals net sales. We're going to take 6,000. We're going to subtract out 200 and then subtract out 116. And our net sales is 5,684. Oh, look, that's the same amount of cash we sold. because we can't overflate our sales. That's why we do this. All right. Hopefully that helps you kind of get through some of this and understand that a little better. If you have any questions, let me know. Oh, really quick, what happens if they actually, if June 9th didn't happen and it was like June 14th? On June 14th, they pay us. If that was the case, then we're still going to credit accounts receivable 5,800, but we're going to receive cash for 5,800. Oops. Whoa, what did I do? Well, that's what it would be if it was June 14th. Okay. But we're going to calculate the sales discount there. All right. You have any questions? Let me know.